Hey guys, what is up? Welcome back to my channel, the best place for investing, trading, and the stock market. In today's video, I'll be talking about technical indicators, specifically Bollinger Bands. I've received a number of questions about how I use Bollinger Bands in my own trading. I am a firm believer of the saying that instead of giving a man a fish, you teach him how to fish instead. So that's why in today's video, I am going to explain to you what Bollinger Bands are, how to use Bollinger Bands, and how to trade Bollinger Bands like a pro. If you are interested in all of that, then make sure you stick around because there are lots of value bombs that you can get from this video. So let's dive right in. The first thing we will be going through is what are Bollinger Bands. So Bollinger Bands consists of a moving average and two trading bands. So one above the moving average, which we call the upper band, and the one below the moving average, which we call the lower band. So how far the two trading bands are from the moving average, the middle line in the Bollinger Bands, depend on the standard deviation of the stock. So basically, in trading, the standard deviation of a stock measures the stock's volatility. The greater the volatility of the stock, the greater its standard deviation. So those are the three components in a Bollinger Band. The three components in the Bollinger Bands are the moving average, which is the middle line you see in Bollinger Bands, and the upper and lower Bollinger Bands. So those are the two trading bands, one above and one below the moving average line. So the distance between the moving average and the upper Bollinger Band is the standard deviation or the volatility of the stock. So in this case, it's two standard deviation and two standard deviation from the moving average to the lower Bollinger Band. So now that we know what are Bollinger Bands, let's take a look at why Bollinger Bands work like they do in the stock market. So we know that stock prices fluctuate constantly. So prices may rise one day and fall the next day. So taking the day-to-day fluctuations of stock prices over a period of time, we can get a good estimate of the volatility of the stock. So Bollinger Bands then take this volatility and extrapolate it to form the two trading bands within which prices are likely to be contained. So Bollinger Bands are kind of similar to traffic lanes on our roads. The people who design our traffic lanes study the average and maximum width of the vehicles that are likely to be on these roads and draw the lines and boundaries accordingly. The lanes are designed not only to fit all the vehicles that use the roads, but also designed slightly larger to allow some volatility for drivers driving these vehicles. So will some vehicles eat into other lanes sometime even if the lanes are wide enough? Definitely, right? But more often than not, the vehicles drive within the lanes because the lanes are specifically designed to not only take into consideration the average width of the vehicles, but also designed with additional room for drivers to move in within the lanes. So this is similar to how the Bollinger Band works. So Bollinger Bands study the volatility of the individual stock and draw lanes for the stock. So you can see this is the upper band and this is the lower band. So these are the two trading bands. So the stock will tend to stay within the two trading bands, but will the stock move outside of the band sometime? Definitely, right? So it's again similar to how some vehicles still travel outside of the lanes even if the lanes are wide enough for their vehicles, but it's infrequent occurrence rather than a frequent occurrence, right? So John Bollinger, the person who developed the Bollinger Bands indicators, studied many stocks and found that stocks typically move within two standard deviations above the moving average line and two standard deviations below the moving average. So stock prices tend to stay within the Bollinger Bands. But do they stray outside of the Bollinger Bands from time to time? Again, these situations are the exceptions rather than the norm. So now that we know how Bollinger Bands work in the stock market, let's take a look at how we can use this technical indicator on our price charts. So there are two main strategies that we can use for Bollinger Bands. The first strategy is to use the Bollinger Bands to help us determine whether the stock is overbought. How do we use the Bollinger Bands to determine whether prices are overbought? So if prices are close to, at, or above the upper Bollinger Band, this can indicate that prices are overbought. So at this point here, the first point, then the second point, and the third and fourth point. So these are areas where prices are indicated by the Bollinger Bands to be overbought. So when prices are overbought, prices tend to fall back down. So if prices are close to, at, or above the upper Bollinger Band, then we want to avoid buying the stock at that point in time. So some of you might be wondering, will prices continue to rise when it is close to, at, or above the upper Bollinger Band? Definitely. So as with all indicators in investing and trading, there's no indicator that is 100% right all the time. So what these indicators such as the Bollinger Bands do for us is give us a higher probability of success in the stock market. So prices may continue to rise when it is close to, at, or above the upper Bollinger Band. But prices are more likely and have a higher probability to decline at that area. So that's the first strategy for Bollinger Bands, to avoid buying when prices are close to, at, or above the upper Bollinger Band. The second strategy is when prices are at the lower part of the Bollinger Band. We can look to buy at those points. So like this point here, this point here, this point here, this one, and this one. So when prices are at the lower part of the Bollinger Bands, this can indicate to us that prices are oversold. So prices that are oversold tend to rise rather than decline. So therefore, when prices are close to, at, or below the lower Bollinger Bands, we can look for potential points to buy the stock. Alright, now that we know the two strategies for Bollinger Bands, let's take a look at some examples on our price charts to see how we can use them in our own investing and trading. So this is the price chart. So can you identify potential points of entry and exit using the upper and lower Bollinger Bands? Okay, take some time to identify these areas and we'll go through in a moment. Alright, so can you see here, this candlestick is at the lower part of the Bollinger Band. So remember, when prices are at the lower part of the lower Bollinger Band, what happened? It indicates to us that prices are more likely to rise in the future, right? So if you see, if we enter here at this point, can you see what happened to prices after that? Prices rose up all the way, right? It rose up for a while. And then what happened here? At this point, the prices are at the upper Bollinger Band. So again, we mentioned earlier on that if prices are at the upper Bollinger Band, there is a higher probability that prices are likely to decline, right? So what will we want to do when we are investing and trading the stock? We want to sell our stock at that point in time, right? So why do we want to sell? Because as I mentioned earlier, when prices are at the upper Bollinger Band, prices tend to fall back down. So can you see after prices reach the upper Bollinger Band, what happened to prices? Prices start to decline, right? So if we bought here and we sold here, what will be our profit? So we take the price. So the final price is around here. Let's say we sold it around here. So we sold it at around 145, right? And then our original price, we bought it at around here. So around here is around 135. So we take the final price minus our original price divided by the original price, we get 7.4% on our trade. So 7.4% return on our trade or investment is a pretty good amount, right? So that is one trade. So where will you next look to enter the stock again? Right, you will look to enter here, right? And again, why? Because prices here are at the lower part of the Bollinger Band. So when prices are at the lower part of the Bollinger Band, again, this indicates to us that prices are likely to rise in the future, right? So can you see that? Let's say we bought it here, and then what happened to prices? Prices immediately get up and reach the upper part of the Bollinger Band, right? So again, if we bought at the lower part of the Bollinger Band, we also want to sell at the upper part of the Bollinger Band. So this is just using the Bollinger Band as a trading strategy. So we will have sold it around here. So the amount we will have made will be 146. So we will sell it around here. So here will be 146 minus 140. So you bought at around here. So this price is around 140 divided by 140 because this is the original price we pay. So we will have made 4.3% in this trade, right? Okay, so where will we want to enter the stock next? Right? It's here. Why? Because you can see that when at this area, prices are closer to the upper Bollinger Band. So there's no potential points to enter the stock, right? So the moment prices fell a bit, then we get a good indication that like, okay, prices are at the lower part of the Bollinger Band, and this indicates to us that we want to enter our position in the stock. So we would have entered here, and where would we have exited? We would have exited at this point, right? So this point is because, again, prices are at the upper part of the Bollinger Band. So we would have made 155, we would have sold around this point, and we bought it at 148 and divided by 148, we have made another 4.7% in our trade, right? So the last point we would have entered is this point again. So this is the lower part of the Bollinger Band, and we would have sold it at here when prices reach the upper part of the Bollinger Band. So how much would we have made? We would have sold at around 158, right? Around this point, 158, and we enter around 154. So we divide by 154, we would have made 2.6% on our trade. So can you see how powerful using the Bollinger Bands can be when we are using it for our investing and trading? Yeah, right. It is very powerful. So what we want to do is use this Bollinger Bands with our other technical indicators to give us even greater confirmation. Alright, so let's take a look at another price chart to see how we can use the Bollinger Bands. Alright, so let's say we will start it from the left to right? So where would we enter? We will enter this point, right? Because again, prices are at the lower part of the Bollinger Band, and we would have sold it at around this point because prices are at the upper Bollinger Band. So let's take a look. We would have sold at around 87.5, so around this point, right? So 87.5 would be around this point. And then we got in at around 82. So 82 is because we got in at this point, so 82 will be around here, right? So we divided it by 82, which is the base, and we will have 6.7%. So 6.7% is the amount of profits that we have generated from this single trade. So where's the next potential entry point for us? Right, it's here because prices are at the lower part of the Bollinger Band. So if we enter here, where would we have exited? We would have exited this point, right? So yes, so this point. So because prices are at the upper Bollinger Band. So again, let's calculate how much we would have made from this trade. We would have sold at around this point. So this point is around $96, and we would have bought at 87. So 87, we would have bought it around here. So 96 minus 87 divided by the base 87, we will have made 10.3% returns on our trade. So can you see how powerful it is? Alright, so where will we have entered our stock next? We would enter here, right? Because prices are at the lower Bollinger Band. But can you see that after we enter, prices immediately fell? So once prices immediately fell, what we want to do is we want to acknowledge that, okay, we made a mistake for this trade. So we will get out at this point, right? So we will have made a loss on that trade. So how much will we lose? We will have sold it at around $86, right? So we sold it at 86 and we bought it at 88. So we would have made a loss of negative 2.3%, right? So this example is a very good example to illustrate that no technical indicator can give us a 100% win rate. But the good news is for us investors and traders, we don't need to be 100% right all the time in the stock market. We just need to use indicators that give us a higher probability of success. And when we are right, we win more than when we are wrong. So with that, we will always be profitable in the stock market in the long run. So, okay, so now that we lost in this trade, where's the next trade we want to enter at? We will have entered here, right? Because the next time prices reach back the lower Bollinger Band is at this point. So we got in at this area. So where would we have sold it? We would have sold it here because prices reached the upper Bollinger Band, right? So we would have made 104, which we sold at around this price. So we sold here, so it's around 104, and our original entry price is around 97.5. So we would have made 6.7% on that trade. So where's the next point of entry we would take? It will be here, right? Because prices are at the lower part of the Bollinger Band. So we would have sold it at around this point because prices are at the upper Bollinger Bands. So we would have made 4.7% on our trade. So on this chart, can you see that we are right more than we are wrong? Not to say that we are 100% right, but we are right more times than we are wrong. And can you see that on average, when we win, we win more than we lose, right? Because here we make 6.7% on our trade, 10.3%, 6.7%, 4.7%, and when we are wrong, we lose negative 2.3%. So that is how we use the Bollinger Bands in our trading strategy. Alright, so far in this video, you have learned the 2 Bollinger Band strategies that will allow you to trade it like a pro. Comment below what you have learned in this video and how you plan to use it in your own investing and trading. While you wait for next week's video, check out the video and playlist on the next screen. I'll see you in those videos to your financial success.